Hello, everybody. Welcome to NFA Live. We have a pretty good show today, I would say. We've got Ben from Into the Cryptoverse as usual. Ben, thanks for stopping by. We appreciate it.
Pleasure to be here.
Yeah, I bet it is. And we've got Dan, who is the head of research at Coin Bureau. This is Dan's second time here. And Dan, I'm happy that you came because you were the guy, the linchpin over there at Coin Bureau, which puts everything together. So I think we're going to see a bunch of massive alpha from you. So thanks for stopping by.
Well, thanks for having me, Rob. It's my pleasure's all mine.
Absolutely. So, ladies and gentlemen, if you don't follow Ben or Dan, you can follow them on X and you get some bangers like basic advice from Ben: not your keys, not your crypto. Which way is Bitcoin heading after CPI tomorrow? Down. And people were wrong on that one, but sure. And then also stuff like this. If MEMECOIN's had earnings call, they'd be like, hey, we only rugged three of our investors, but our community is solid. And then, of course, you can follow Ben here on his YouTube channel, which we all follow. Dan, I've linked his X account in the description below. You can also sign up for Coin Bureau Club. Take a look at Dan's portfolio. Dan, I got to tell you, you're a pretty risk-on guy. I was pretty surprised at this portfolio. I don't want to tell you what it is, but I'm like, okay, I like this guy. So we've got Dan there. You can also follow Coin Bureau on their main channel, more Coin Bureau. You can follow Dan and everybody else over at Coin Bureau Trading and also Coin Bureau Espanol, the best crypto offers. So, gentlemen, let's get into it really quick. So the first thing is this. I lean on you guys for macro. And the question that I have is pretty basic. The CPI numbers came in and inflation's back. We know that that rate cuts are not going to happen. I mean, definitely not in March unless 2.5% of the people are actually correct. And there's going to be no quantitative easing, which is kind of shaking the entire market. So if this continues with where we're going, when do we see a rate cut, and is a rate hike on the agenda? So Dan, I will start with you on this one and take it away.
All right. Yeah, I'll try and keep it short. But to be honest, my expectation, I guess I was one of those people who voted that it would probably come in lower than expected. And this is for the reason that in late last year, you could see that rents, basically like forward-looking indicators for rents, were starting to come down. Mm-hmm. Of course, with a lot of the stuff happening now, like of course, I guess I'll back up a little bit. The main reason why inflation has been so high, like CPI specifically, is primarily, or at least a large portion of it, is due to services inflation, specifically around rents and housing. And one of the big reasons why rents and housing has been up has been because of all the, let's say, for lack of a better term, uncontrolled migration into the U.S., which of course has stopped now, or at least if you believe the official statistics or whatever.
Sure.
But the decline in kind of let's say irregular or unrestricted migration, even just from that fact alone, there should be an easing around rents. But the problem with rents, of course, is that those rents are only renewed like I think once a year. So it's basically, it's a super lagging indicator. It takes a long time for it to feed into the official CPI. And the thing is that with a lot of these, I guess the reason why the markets react so aggressively to the CPI prints, I think, and you guys can correct me if you think I'm wrong, but I think a lot of it has to do with like algorithms and positioning, that the algorithm will just read, oh, it's higher than expected, sell, right? And in the case of crypto, in your question, Ben, you had asked like, why is it that crypto started rallying? I honestly think it's because people were already so short that the slightest bump up in price just causes some shorts to be liquidated around the margins and cause a little bit of a squeeze. But of course, the crypto market's still looking pretty weak. But yeah, I guess my opinion though is, I do, just to summarize, I think that CPI is actually going to continue heading lower in the coming months, primarily because I do think that rents are going to start falling. When exactly that's going to happen, I'm honestly not. I'm not a macro guru enough to tell you exactly when. But I do think that that's something that's going to come down. The only caveat to that is because of these tariffs. There has been, and again, I haven't looked too closely into this particular inflation print, but I know that lots of companies are basically stacking up goods in anticipation of tariffs. So they're buying stuff in advance because they're worried that they're going to have to buy more or buy at a higher price when the tariffs come in. And this could be putting pressure on the basically raising the good side inflation as well. But I think that this is a temporary phenomenon that's also going to pass. And we should see CPI starting to fall again in the next few months.
Okay.
That's my take.
As everybody breathes a sigh of relief in the chats, we'll ask Ben the exact same question. If he can give us that bullish recommendation, or is inflation here and here to stay and keep going higher? What do you think, Ben?
Yeah, I think I was more in the camp that it might come in a little hotter, but I do agree. Like, I don't think we're gonna have like a massive second wave, if that makes sense. Like, a lot of people compare it to like the 1970s.
70s, yeah, Volcker.
Yeah, I don't really think that's what's going to happen. If you look closely at like the 1970s, when there was a second wave, it was also after the unemployment rate had been trending down for a while. And one of the big drivers of inflation is wage inflation, right? If everyone's getting paid more, then they're going to spend more money on everything, and demand is higher for that stuff. Supply issues, if there's any supply issues, the prices just go parabolic. And that's what you're seeing with like the price of eggs right now.
Yeah.
But no, yeah, I think that in like the very, very short term, the market has kind of been concerned with the fact that ever since the Fed started to cut rates in September, inflation has only gone up. Headline inflation, that is, has only gone up. It's gone up by about 0.12 to 0.14% per month. But I don't really anticipate any rate cuts anytime soon. It's always possible that their next move could be a hike, but I wouldn't consider that to be the base case, because I think that there's a decent chance that they're already sufficiently restrictive, and as long as they just hold rates at this level for a longer period of time, that would probably do the job that they're wanting to do. I mean, I know you could look at like the 1990s and see they raised rates. At one point, they dropped rates from like 5.5 to 4.75, and they had to raise rates back up to over I think 6% later on as the animal spirits came back alive. But I also think the other thing too, and maybe Dan mentioned this as well, but with the whole changes in immigration, one of the reasons we've seen the unemployment rate go up for the last year or so was because of just an overall increase in labor supply. And now you're not going to have that the same way with changes in immigration policy. So that that in the very, very short term, like that could be inflationary, because you don't have as much supply. And even President Trump said that he wants to increase the labor supply and reduce aggregate demand. Well, I mean, that's the idea, right? That's how you get inflation under control. But yeah, what I kind of think is probably happening is we're getting sort of a fake out in like sort of the CPI going up for a little bit, and it's going to make everyone think it's going to be like the 1970s. But I mean, maybe we'll look back and it will just be a carbon copy of the 1970s. But to me, it doesn't really seem like that's the most likely outcome. If you see like inflation get like a big jump like the 1970s, like at one point in the 1970s, it went from like 3.8 to 4.8 in a single month.
True.
I mean that would absolutely spook the markets if something like that happened. But I think for right now, if you look at most of the categories with inflation are in fact trending down. Shelter, housing is trending down, and that housing for headline CPI I think makes up like 2/3 of it. So a lot of it's coming from housing, which is trending down, and it doesn't really look like it's going to be trending up anytime soon. And some of the other stuff like other goods and services, that's been trending down. The only, some of the things that are that in the short term that I think cause the higher CPI print, if you look at like transportation, that kind of had a higher print than the last couple of months. I think that affected it as well. So yeah, I think in the short term, the market's a little spooked that, is inflation going to go higher? I think it's just going to be kind of a scare where everyone thinks it's going to go back like 8 or 9, but it doesn't actually do that.
Yeah, we'll see. I like to take a look at, and again, great responses, everybody. There's this part of your website, I like these macro recession risk indicators and the crypto risk ones. If I can open these up, I like just to see like an aggregate of what's going on. So employment, job openings, job quits. Speaking of which, didn't we just see employment, not the unemployment rate, but didn't we just have a print of the, what's today? Thursday.
Today's Thursday. Initial claims.
Jobless claims. Yeah, initial claims. Didn't they go down to 210,000?
Yeah. Well, I think they went to like 213.
Yeah, 213 was.
Yeah.
Oh no, 213. Excuse me. Yeah, it was 220. Expectations 215, and now we have 213 for jobless claims. Unemployment is also down as well. So I guess we can take a look. That's a sigh of relief for everybody. I can see that. So again, thanks for the response. But let's do a follow-up here, which is the balance sheet. So if we're going to talk about inflation, the balance sheet right now sits at 6.8 trillion, which is down from its all-time high around 9 trillion in March of 2022. Since a shrinking balance sheet will lead to tighter financial conditions, is there any end in sight for quantitative tightening? And just for a little bit of reference, if we take a look at the Fed's balance sheets right now, it's come down from 2022, but I mean, we still got a ways to go before we hit pre-pandemic levels. So Ben, I'll keep going with you and then I'll jump to Dan for the final say on this one. When do we stop seeing so much tightening?
Maybe when there's a reason for them to stop.
That's a pretty good one. Maybe, yeah, exactly. Just like the markets. Why is the number going down? Because there's more.
It's everything. It's kind of the same conundrum that everyone's had this entire cycle, right? Like, why does Bitcoin dominance keep going up? Because monetary policy hasn't really changed, and everyone keeps trying to front run alt season, and Bitcoin just keeps on outperforming most everything else. I'm not talking about your altcoin though, right? But it outperforms most everything else. And I think people should also remember that it's not like you have to have QE for altcoins to outperform Bitcoin. I think that, I mean, if you look at like 2017, it's not like the Fed was expanding their balance sheet like crazy, like they were in 2020 and 2021. And we still got a very brief period where altcoins outperformed Bitcoin. It really started in November of 2017. And then we saw like this massive surge by all Bitcoin pairs. So I do think that there's like, you don't have to have QE to see all Bitcoin pairs go up.
Right.
But I think in the environment that we've been in for a while, yeah, like right there, you can see that was flat. The balance sheet was flat. You could argue that if the balance sheet just goes from slightly down, from where it is now to flat, like all of us degens would probably interpret that as QE, even though it's not QE, So I don't know. I don't. If you look at sort of the Bank of Canada as well, they've always kind of like led they've always kind of led the Fed this business cycle anyways, in terms of like when they're cutting rates. Like I think they cut rates a few meetings before the Fed did, and and the Fed went higher than the Bank of Canada did. It seems like the Fed's been willing to do a little bit more than the Bank of Canada, and the Bank of Canada just announced that they're going to be ending quantitative tightening. So like I wouldn't be that surprised if the Fed followed suit in a few meetings. I don't know exactly when it would be, but I wouldn't be that surprised if they followed suit. But Powell made it really clear that they're not starting QE anytime soon. And I know a lot of people have kind of faded what he has said throughout this entire business cycle. A lot of people didn't believe higher for longer. And a lot of people really didn't believe that QT could go on this long. And so they underestimated how long alts could actually bleed against Bitcoin. But if you take him at his word, which he has been wrong before, right? I mean, obviously he said inflation is transitory, but if you take him at his word as to what they're going to do, QE is still pretty far away, right? Because he said that QE won't come back until interest rates are at 0. Now, I don't know if that's true. That's what he said at the Senate hearing, like a couple days ago.
True.
So, again, I don't know that that's true. I feel like the only way he would change his mind on that is if, as before, right, if there's a really good reason for him to change his mind. If something really drastic happened that really spooked the markets, and it would have to be something bad. Like, I mean, if it were inflation going back up, the last thing, I mean, they wouldn't want to start QE back up if inflation starts to go back up. It would have to be because the labor market is falling apart, and we're not seeing that right now, right? Like, as you said, initial claims are at 213,000. If you look at layoffs and discharges right now, they're still kind of they're not that far below, but I think they're still sort of below the pre-pandemic levels of layoffs. So it's kind of an interesting labor market because there's not really a lot of layoffs. The reason why it feels kind of bad for some people is if you don't have a job, it's kind of hard to find a new one. You know, that's why, I mean, we see hires are down, job openings are down. If you look at like the number of job openings per unemployed worker, it's basically back to 1. It's like a little over 1, whereas
Right.
3 years ago it was at like 2. So there was like 2 openings for every worker looking for a job. So it's more so, I think this is a market more difficult for people to find a job. But in terms of like layoffs and stuff, that's not really that high right now. It's still relatively low. And I think the last thing, I think one of the reasons it's relatively low is because layoffs come after drops in the stock market, not before. You know, I think a lot of people are like looking at this being like, oh, well, you know, if I figure out when the layoffs start, that means I can sell, you know, my index funds and save a lot of money. But in reality, it's the stock market going down that leads to the layoffs, not the other way around. So there's a bit of a cause and effect there, I think, that we have to be aware of as well. Those are my views.
Yeah, exactly right. And then also the same thing with the markets. You know, usually the markets will recover. If we're in a recession, markets will recover first, then the GDP, then the economy, then everything else. So, Dan, same question for you. I know you got a good take on this one. So what do you think about this tightening, the great tightening, as they call it?
Right. So I guess I'll start. I agree. I guess I'll underscore Ben's initial point that I don't necessarily think QE is that important. Or sorry, that I guess the QT/QE. I mean, QE is important if it's in a large size, but the QT that's happening now, I don't think is not significant. Like, just to put things into perspective, if I remember reading correctly, I was like looking at some notes before we went live. I believe it's around 45 billion balance sheet runoff each month. Which is not that much, which is really not that much, especially when you compare it to, you know, like as I'm sure you guys will know, and many people watching will know, the debt ceiling was recently hit, which means that the U.S. government cannot issue more debt. Of course, the thing that everyone has been watching is like for the Treasury General account to be drained. To my understanding, this is something that's going to start at the end of this month. But setting that aside, the thing that's interesting is that when the debt ceiling is hit, the Treasury cannot issue any more debt. So on like a purely supply and demand kind of like dynamic, you're dealing with, okay, there's less demand coming from the Fed like each month because they're buying 45 billion less essentially. But then there's something like 80 or 90 billion less supply coming on each month because the debt ceiling has been hit and they can't issue more long-term bonds. That being said, I honestly don't know if the Treasury is allowed to continue refinancing existing obligations. It's just like that they're at the limit and they're able to still issue, but it's just like, you know, just to keep chugging along basically at whatever the limit is. But barring that, I guess point being is that I don't think that QE is that big of a deal. And this is something I was actually going to mention to you, Rob. My personal thesis is that the main reason why altcoins have been struggling is because ETH has been underperforming. And if you just think back in terms of the like even the historical rotation that we all kind of knew, that everyone just kind of forgot, is like it's supposed to be, quote unquote, supposed to be like Bitcoin, then Ethereum, then everything else, right? And in this cycle, what we've kind of seen, what I was mentioning to you earlier, Rob, was like it was Bitcoin and then Solana and then just like a few altcoins like XRP and whatever, and then just like meme coins, right? Which is pretty interesting. But the I guess to underscore the original point though, I think the reason why Ethereum has been, and this is maybe somewhere where Ben and I might disagree, I don't think that Ethereum has been struggling because of QT or QE. I think that Ethereum has been struggling because the interest rate on staking Ethereum is significantly lower than the short-term interest rate. Like, so I guess to go on a little bit of a tangent, I know that lots of people know that like the narrative for Bitcoin is like digital gold, right? And everyone's been wondering what is the narrative for Ethereum. And of course, within the Ethereum community, there was lots of debate. Is like, oh, it's ultrasound money and all this, which is, you know, dead in the water. But the one narrative that everyone kind of seems to have forgotten, which I actually think is pretty compelling, is that Ethereum is kind of like something like a decentralized government bond, because it plays the same purpose. It's like you use it in DeFi. You use it as collateral to borrow against, right? The same way that you use bonds. It earns a yield. The more that you stake, the lower the yield goes, which has the same kind of supply demand dynamic as with bonds. And if you assume Ethereum to kind of be this like high risk, short term like government bond equivalent, because you can quickly liquidate it, right? Theoretically. Then what that basically means is that Ethereum staking reward is competing with kind of like short term yields, potentially not just on government debt, but also on short-term yields on like corporate debt, right? And these yields are quite high, like whatever it is, 5%, 7%. So like no one's going to touch Ethereum if they're able to earn a risk-free rate of whatever it is, 4.5 or 5%, right? But and especially because you can't stake through the ETFs yet, right? So I think that's one kind of structural change that needs to happen. So once that happens, it's kind of like a crypto factor that's going to make it possible for institutions to actually get exposure to that Ethereum yield. But then the other change that needs to happen is that interest rates need to come down. Not that, forget about the QE, QT part. Interest rates need to come down, at least that they're close enough to the Ethereum staking reward, which of course, again, there's the dynamic there that when the reward comes close, then more people will stake ETH and the ETH goes down, but the ETH staking reward goes down. But all those details aside, I think that once interest rates fall below or fall close to that level, which I think is around 3%, short-term interest rates specifically, then we should see more capital flowing into ETH because it's just like a higher risk, like short-term kind of bond type of play within the Ethereum ecosystem. But the other, and this is kind of where I'm not necessarily that I differ, but I think one factor, and I'm very curious, Ben, to get your kind of like your take on this. One factor that I think we're all missing here is like, of course, there's unemployment and of course there's inflation, but what about economic growth? A lot of the economic growth has been coming from government spending, which is now being cut like crazy. Like I honestly think that all these comments that Trump is making around like, taking over Gaza and whatever, I think it's all to distract from the fact that he's just like cutting like all this spending like from USAID and like all this stuff and everything. I mean, who knows? I know it's technically not being cut. It's just like they're just identifying it and then maybe it's going to be cut at some future date or whatever. But the point being is that if most of the economic growth was coming from fiscal spending, which apparently, or at least it really looks like they're trying to cut that much down as much as they can. And at the same time, you guys might have heard that at the Fed's most recent meeting on the same day, I forget if it was January 29th or whatever day that was, on the same day, Bloomberg or whoever released like a transcript from like the Fed's 2019 talks. And they basically said that tariffs did not cause inflation. They actually hurt economic growth. So if you have a combination of fiscal spending, if fiscal spending is being reduced and you have tariffs coming in, which are, again, at least according to this Fed paper that was released on the same day, it didn't boost up inflation so much as it actually did more damage to economic growth. So if you have a slowing economy, like all of a sudden the economy just starts to slow, this could be enough for the Fed to start cutting interest rates because I imagine the logical conclusion from that would be like that inflation would start to fall just as a consequence of the contracting growth. And that they need to step in and kind of be supportive. It doesn't mean they're going to go all the way back down to zero. And this is kind of like where I agree, and I guess I agree with Ben in the sense that everyone thinks it's like the 1970s. But I'm kind of like, I don't want to say like in the opposite part of that cycle. I think that as soon as at last September when the Fed first started cutting, everyone assumed that interest rates would go back to zero. And then over the last 6 months, we've seen like a complete pivot where everyone expects that it's going to be higher for longer. And I actually think if we're going to see another pivot again, where the Fed's going to start cutting rates. And people are going to say like, oh my God, like interest rates are going back down to zero. And then we're going to see a resurgence in inflation as a result probably of not tariffs per se, but the economic or like restrictions on exports and stuff like that. That's genuinely going to cause inflation. It's one thing if you have to pay 15 or 20% more for something. It's another thing when you can't get it at all, right? That's when you really get, you run into issues where there's serious shortages of like, certain things and medicines and whatever. I'm not saying that there's going to be shortages or anything like that, but this is kind of like the pathway that I see happening. But anyway, sorry for the ramble there, but it's really interesting, and I definitely think the economic growth part is something to keep in mind. And Ben, I definitely want to get your take on like what do you think about this Ethereum as a decentralized bond and interest rates is competing with that? If you think it's a valid thought or argument or what have you.
Before you jump in, I just want to say that's very insightful. James here says agree with all of his analysis, very insightful. And then of course the flip side to that is he isn't cutting anything. He's going to double the debt. Interest rates are going to skyrocket. So Ben, what do you got here for this piece? That's a lot to
yeah,
to
no, I mean, I like talking with someone who speaks English.
Yeah.
I one of the things back in 2022 that made me get out of Ethereum was that exact thing, right? It was like, well, one of the nice things about proof of stake in the last cycle was you could get a return that was a lot higher than anything you could get in like a money market account or in like a CD or in a T-bill, right? But now, for a while, you've been able to get 4 to 5% in the risk-free rate. Right. And so it certainly affects things like, the proof of stake models. Right. And it was one of the narratives I spoke about back in 2022. But I also subscribe more so to the idea that the narrative follows the price and not the other way around. So I do 100% agree with that view. That was actually one of the reasons, again, like I got out of Ethereum back in 2022. So I can't dispute it. I would say though that my sort of base view with the crypto markets is that altcoins are oscillators at best against Bitcoin. Like they're not. There's like a couple of exceptions where you've seen them like go higher for more than one cycle, but for the most part, I consider alts to be oscillators against Bitcoin at best. And like here's the ETH Bitcoin market cap ratio, and so to me, what it seems like is going to happen if you just look at like a price label on this, right? I mean, the ETH market cap tends to top out whenever it reaches around half of Bitcoin's market cap, right? And it looks like it kind of bottoms out at around 10 to 12 to 13%, right? It's already gone to like 14%. So yeah, I don't really consider the next move by the Fed to be a hike. I think it probably will be a cut. And it could certainly be due to just a scare in the market, a growth scare, right? A growth scare. And ultimately, that's kind of the base case that I've had for a while, is that you're going to have a growth scare at some point. It's going to cause ETH to go deeper into its logarithmic regression band. And last cycle, it was actually when ETH USD broke its higher low structure. That's when ETH Bitcoin bottomed out. And then that was when the Fed started to really shift monetary policy. So I think that, there's about 1,000 different narratives you can come up with for why the ETH market cap relative to Bitcoin's has come back down. And I think a lot of them are valid, but I also would argue that that's kind of what needed to happen, right? The markets, the animal spirits become too alive up here, and it causes market conditions to change to get the animal spirits back in line. And my guess is as we sort of come into this range over here, we're going to see those narratives shift back, right? We're going to see lower rates at some point after likely a growth scare. We'll see the long end of the yield curve come back down, which is exactly what the president wants, right? I mean, he's a real estate investor. He wants to see the long end come down. So I think you're going to see all that. I think the hard part for this cycle and for a lot of people is that this whole process is just taking a lot longer than I think most people thought it was going to take. And I think that's why a lot of people are getting really irritated with each other and, fighting about alt season and getting kind of really snippy with each other on Twitter, is because a lot of people, we just kind of lack the patience to watch these whole business cycles play out. Yeah,
I never understand that, because I'm in it for the tech. So I don't get where the animosity is coming from. Yes. Exactly.
We'll see the price. The price goes down for more than a year straight. We'll see who's still in it for the tech, right?
Can I throw in, Rob? Sorry to interrupt. Can I throw in like a hypothetical? Because this is one thing. It actually occurred to me earlier this morning, and it's probably something I'm gonna do a research feed post about in the Coin Bureau Club. What do you guys think, or I guess especially Ben? Like one thing that I think a lot of we tend to treat crypto like it's something that it's in isolation from the financial system, and that the effect is single direction, right? That like whatever happens in the financial system goes into crypto, and that there's not very much like, that crypto can possibly have an impact like the other way around, right? Like nothing in the crypto market, like if Bitcoin crashes, it's not going to cause the stock market to fall, right? This is like the assumption. I mean, of course, there's some exceptions in terms of like the banking stuff, but regardless, the thing that I think that a lot of people are overlooking is, especially as we start to see like stablecoin regulations introduced, like under the new administration, is there a scenario where like the growth, because this is one thing I was listening to, I guess to backtrack to the Treasury General account, to the TGE, like that's like the one source of liquidity that a lot of people are watching. And some people are saying, oh, but like when that TGE is drained, that needs to be refilled. And like the markets see past that and they just say like, okay, well, great, you're draining the TGE, but then what comes next? Last time they were able to take it out of the reverse repo. How's the Treasury going to like fund itself once it's used up that last chamber of bullets, so to speak? And I think that there's one in the back pocket that no one's talking about, and that's stablecoins. And this is kind of like my, let's say, I don't know if you want to call it like my tinfoil hat take on why not only will an alt season happen, but it needs to happen, is because alt season creates demand for stablecoins fundamentally, because altcoins trade primarily against stablecoins. And this is one thing where we're really going to get down the rabbit hole. I'm sure you guys, everyone who's listening probably knows about the Trump meme coin. One thing about the Trump meme coin that is extremely fascinating to me is that meme coins are typically pooled against the coin of the chain that they're on. So all meme coins on Solana, they trade against Sol, right? You pool it against Sol, trades against Sol. The Trump meme coin was pooled against USDC. And that is, to me, is extremely fascinating, because the consequence of that was that USDC supply exploded. And people say, oh yeah, like Trump made all this money. He like sold some of the meme coin and blah, blah, blah. The biggest winner of the Trump meme coin launch wasn't Trump. It was the US government. They got billions of dollars of inflows into the stablecoin, like into the stablecoins, which meant that you needed to buy more treasuries to back the stablecoin. And I don't think it's a coincidence that it happened just before Trump was inaugurated. Like, the way that I see it is literally like you're on a motorcycle and you're like testing out the handle to see if it works. It's like, can we get speculation into crypto, into the, like, in this way? And can we drive basically stealthily billions of dollars of demand, not just from the US, but from all over the world? Everyone who's speculating on altcoins and these meme coins, can we get all these people who are just like desperate, especially because objectively speaking, the economy is not doing well for the average person. It's just like the top 20% that make up 40% of the spending and whatever. If the average person around the world globally is struggling, they're just like, just give me something that I can just put my money in and I can get ahead, right? And then you have all these, like, you know, all the UX and UI on like Phantom Wallet and all these DeFi protocols is like advanced, and they can just move all their money in, and everything in there is trading against stablecoins. Then you can literally have hundreds of billions of dollars going into stablecoins, right? Essentially, like, it goes, you have to buy the stablecoin to buy the altcoin. So you buy the stablecoin to buy the altcoin, and it creates demand for the stablecoin. And you have a huge growth in stablecoin market cap, and you have hundreds of billions of dollars of government debt being bought in the background. And then this is where the real kicker comes in, that the treasury, with the treasury general account, uses a portion, maybe even most of the money that's in there, to buy the long-term government debt to suppress the long-term yield. And at the same time, the short-term yield is being suppressed by basically all the stablecoin buying. And you end up basically where the whole yield curve comes down as a result of this thing. And it's kind of like a very temporary thing to kind of kick the can down the road so they can raise the debt ceiling. Because, like, from my perspective, and I'm sorry I'm rambling here, but from my perspective, if they try and raise the debt ceiling again and they try and issue more long-term debt, like, who's going to buy it? Like, there's not enough buyers, right? So you need to, almost like a judo, you need to find some way of just like, let's just quickly move this here, and then quickly, like the same way Indiana Jones, you know, does the thing on the, on, you know, that famous thing. It's the same thing. It's just like, we need to refinance. Let's just create a speculative bubble in crypto and have everyone buying these altcoins and these meme coins that pool against USDC. Let's get hundreds of billions into this stable coin and like use that to finance. We'll pull it here, and then we raise the debt ceiling, and you know what I mean? And then before the crypto market crashes, we get everything sorted out. Anyway, I guess it's more of a rambling than a coherent question. But this is I mean, I'm not saying that this is going to happen, but it's just something that I find it so fascinating that people are not paying attention to that. It's like the Trump meme coin literally caused like $3 or $4 billion of demand for U.S. government debt stealthily, right? That's insane. That's like, and just imagine that on like a 100 times larger scale. Like there's literally an incentive. There is at the very least an incentive for the U.S. government to create stable crypto market speculation, precisely because it will result in more stablecoin buying. Of course, like stablecoin payments, sure, people will, you know, but if you really want to drive demand for stablecoins, you need to create an altcoin speculation, like unlike any other, you know, like, so anyway, there's my little, and you have all the people in power to make it happen. All the right people are in place for that to happen. So there you go. There's my crazy tinfoil hat thought there.
That was
you could definitely have like an alt season at some point, right, this cycle, but
of course.
I guess I hadn't really thought of it like that. I was my sort of thinking on it was just he had to launch he wanted to launch the meme coin before he took office, because you're not the president's not allowed to like do things like enrich themselves like while they're president. And so by launching it just a few days before he became president, he can claim that it was not done during his presidency. So I think he was just trying to take advantage of the meme coin craze, is my personal opinion. I mean, that's kind of what I think. And he was trying to do so before it became a more obvious conflict of interest. But we'll see. I mean, normally all the prior alt seasons we've ever had were basically in post-halving years, right? So if we're going to get one, this would be the year for it to happen. The question is like, do we actually get one? I think a lot of people were hoping it was going to be in early 2025, kind of like it was in early 2021. And it is like, you know, we're coming to find out that that's not actually the case. And it might be more like 2017, where that phase of the cycle wasn't until really the very end of the post-halving year, right? And that's assuming we get it, right? I mean, hopefully the macro holds up for the entire year to allow that to happen. So yeah, I mean, I'm not going to say that. I don't know. I mean, I haven't really thought about it the way that you said.
Yeah, but I guess just to quickly underscore the point though, is that that's the thing that's really fascinating to me, is that we're waiting for the Fed to create these looser financial conditions, but we could we could end up in a very paradoxical scenario where if there's enough speculation in altcoins or whatever, that drives more demand for stablecoins, that creates the loose financial condition, that the speculation creates the loose financial conditions that creates a speculation, and you end up in this like really weird, like almost like a spiral. Yeah. And anyway, it's super interesting. Sorry,
Yeah.
Rob. I know you're.
No. That was good. It was a good rant. I mean, it was good points all around. That's for sure. I would just say like I have to. It's Occam's razor. I think it's the simplest explanation is the most obvious, and that would be Trump wanting to capitalize on the situation. However, there are people in play behind the scenes, and I think he's surrounded himself with pretty good people. And we take a look at, David Sachs, who's the AI and crypto czar. He's pretty much saying stablecoins are going to boost the U.S. dollar dominance, and that's what Trump has said before in his previous administration. So I can see him doing that. And before we move on to the next question, which is question number 2, is if you think that stablecoins aren't a big deal, there are. And this is why Visa and MasterCard and American Express are kind of looking at this going, what do we need to do to catch up? Just in 2019 and 2024, the transactional value of stablecoins versus traditional payment processors. Stablecoins, you see that in the very upper right-hand or the right-hand corner. That's in 2024, and that's in trillions. So it's a pretty good assessment of what we just talked about moving things into the US dollar, which makes the US dollar more strong. And then we can move on and actually create this liquidity in stable coins and actually be a dominant factor. So I see it as that. Anyhow, on to the next question. So the S&P 500 versus the crypto markets. And I got to ask you this is we talked about correlation versus non-correlation just yesterday. This might be just a kind of a gimme question, but just yesterday we saw that, CPI numbers came out in the traditional market. Not that it tanked. I mean, 0.15% is like a Tuesday at 305. I don't really care about that. But the crypto market itself, I mean, we saw today's the 13th, correct?
Yes.
Yeah, thank you. So February 11th, the crypto market cap went from 3.2 to 3.36, and we saw a little bit of a pump. And I know that, of course, traditional markets, the S&P 500 is not everything. And when we saw that Meta, formerly known as Facebook, took off, and I think it hit its all-time highs. The question that I have is very basic, which is why did this actually happen as far as like correlation versus non-correlation? So Ben, I'll start with you on this one.
Say that again. Why did it happen to correlate? Say that one more time.
I'll say why was there not so much of a correlation? And as we see, like in the past, if the traditional markets blow up or they have a sneeze, it's like our crypto markets start to have the flu. Why wasn't there a big, huge reduction from after the traditional markets going down?
I mean, the traditional markets haven't really gone down that much, right?
Well, if we take not that much. We had a reduction of 0.35%. Again, it wasn't that big of a deal. But again, if you go down traditional 0.35, and then we've got the, Wall Street over here buying up Bitcoin and ETFs and such, why wasn't that a major decrease? And we saw that the crypto market actually increased.
Yeah, I mean, at the end of the day, the S&P is still really close to an all-time high. Like it's not even that far off an all-time high right now. If anything, I would almost argue that it was the other way around because crypto had a pretty big sort of rinse a few weeks ago, like at the very beginning of February, and the stock market didn't really go down that much. And I mean, I think one of the reasons for that is because all that sort of that fear that people had about, tariffs and everything else. This was also right after the Bank of Japan raised rates, right? I think a lot of it happened over the weekend when traditional markets weren't even open. And so we saw this like flush in crypto. So one of the reasons you might, if you're seeing like relative strength by some cryptocurrencies against, say, like the S&P, like the last week, it could just simply be due to the fact that they got flushed a week ago, and the stock market didn't, and so like it's easy to like look for a narrative like why are they outperforming, but my guess is the most likely reason they're outperforming is because they got flushed a week ago. And it's just sort of a reversion back to the mean, for whatever the current relative valuation of alt, S&P, sort of the valuation of crypto against the stock market is. So I don't see it as that like that much of a big deal if you have like a day or two. Maybe yesterday the stock market dropped slightly and crypto went up. But I think crypto is more so reacting after that big drop. Because I mean, like, we saw like Ethereum drop all the way down to, like 2100. We saw Bitcoin drop to like the low 90s. And whenever we see the asset class go to sort of that range low that it's been at for the last couple of months, it always seems like the knee-jerk reaction is to get a bounce off of that level. Had Bitcoin had crypto not had the flush from a couple weeks ago, then maybe the movement by crypto and the S&P would have been more in line. But I just think there was already a lot of weakness. I think there was already a lot of weakness there, and so it was. I think that's something I say.
Good deal. Dan, anything else to add to that one?
No, I mean, I'm basically in agreement with Ben. The only thing I would add is maybe the thing I mentioned earlier that I guess it ties into Ben's point that crypto was already so oversold. And like from what I got the sense of was that, we get this bad CPI print, crypto started crashing. And then somewhere in there, I imagine like some people started buying, and it just like, because there was no like this cascade of liquidation, all those liquidations were already washed out from the week before, like all that leverage rather. That what happened is that somewhere in there is that you had a little bit of a sign of strength, and like Ben was saying is like, something like caught that bottom, it brought it up a little bit, and then there was maybe a little bit of a short squeeze around the margins, and then it just kind of like reverted more to the mean, meaning like back to the level that it's just recovering from, like basically most of the crash already happened, and there's like there's only so much more, there's only so much further it can go down before people just start buying, and they're like, look, I'm just going to buy this, I'm not
I'm not going to think about it.
Yeah.
That's what most of us do. So, okay. So great take on that one. Now let's get into this one. And I think this is the bigger, this should have been question number 2, really. The market, our market, is it going down a path we don't really want it to go down to? There was a great video, Ben, that you put out. Actually, I got asked about this yesterday in my live stream. I was like, yeah, I'll check it out. The crypto casino was very good. And then on top of that, Dan, I also watched your video a couple of days ago, talked about altcoins specifically. You were talking about Story. And the question is, are we going down this path which we shouldn't be going down? Over time, it seems like we got in different crypto products to actually build something, not crypto projects that do absolutely nothing. I know people like to make money, except for me, I'm here for the tech. But if you see like this is the question rolled up into one picture. You've got the different parts that are trending. There's one on the left called Story, which is the ability to protect the intellectual property on AI on the blockchain. And that sounds like a pretty reasonable project. And then over here, we've got one called Mochi or Mochi, I don't know how to say it. And that one is up 70% in a day. So what's the difference between, say, Story, IP rights on AI, which is a $61 trillion market value, and Mochi, which is crypto's cutest cat, and it's named after the CEO of Coinbase's pet cat, Mochi. The question I have is, are we going down this path that we shouldn't be going down? And why the heck would traditional or the retail investor get back into this market? It makes no sense to me. I'll have anybody want to take that one first.
I can jump in with a kind of cynical take potentially.
Sure, let's hear it.
And that's that I'll explain it using music as an analogy. As a lot of you guys know, I mean, everyone knows, is that, let's say 100 years ago, 200 years ago, 300 years ago, like the music in that era was just amazing, right? Like this classical music, like these huge arrangements of all this stuff. And in the modern day, we've got like just really, recycle the same beat, same kind of chorus, whatever. This is going to sound really cynical, but I think that this is the consequence of what happens when you have a very low barrier to entry to an asset. And it basically, what happens is that you end up with kind of like the lowest common denominator of the entire world. So instead of, like there's only so many people that understand the value. It's like, what even is IP, right? There's only so many people who understand what IP is. And it's like, oh, 60 trillion, great, I guess. But it's like, oh, look at this cute cat though. Like this is the, unfortunately, like this, like just imagine, it's like if you had, it's like imagine if every single person could be a DJ, right? I mean, which is basically what we have today, right? With all these softwares, right? If every person could be a DJ, then you end up with like the majority of music is just this repetitive crap, and that's very low kind of value. This is the same thing in crypto. We've lowered the barrier is so low that that basically you're dealing with the lowest common denominator and people are just aping into garbage. Anyway, that's my cynical take.
I think Dan will just go ahead, Ben.
I was gonna say I think that there's a couple things I think that happened to this cycle is there's a lot of like regulatory scrutiny in 2023 and 2024, so it probably made developers like less likely to want to build because they're just like, well, what's the point of building if the SEC is going to be, on our knocking at our doorstep after building something? So that might have led people to just focus on things like meme coins because they don't have to pour their blood, sweat, and tears into it for 2 years just to get the market to notice it. And I think the other thing is, this market has rewarded two sets of investors for the most part: the people on the Bitcoin dominance train and the people that get in really, really, really early to whatever meme coin rug pull is going on that day, right? And so, these investors over here that are doing the meme coin stuff, a lot of them are getting fleeced because they're YOLOing in, they're trying to sell it to another investor at a higher price. A lot of them end up losing money. You see a few of them make money. A lot of the influencers promoting them make money. So if they're making money, everyone else thinks that they can make money too. But a lot of them end up losing their money. And I also think too, if you see the president of the United States launch a meme coin, we actually saw a lot of people follow suit shortly after because they're probably thinking, well, if he can do it, like, why can't I? I think that's what a lot of people thought. And, I think that the free market, because there's this idea that you need to have regulation to curtail this stuff. And I know that's a popular view, but you could also just as easily argue that the free market will eventually take care of it. That's kind of where I am. I think that the free market will eventually take care of it. And I also, it kind of goes back to the point that Dan mentioned earlier, is that in order for like that, all the stuff in the middle to do well, you need to see ETH bottom against Bitcoin, right? Once that happens, once ETH bottoms against Bitcoin, then I think the narrative changes. And who knows, maybe it already has. I don't know. It's so hard to know, right? It's so hard predicting the exact bottom on that. I know that last cycle it bottomed when quantitative tightening ended. That's what happened last cycle. Could it be the same way this cycle? I don't know. I think that's what's going on. So I think to some degree, the asset class has lost its way. I think the people that got on the Bitcoin dominance train early have done pretty well. A few investors in the meme coin market have done well. Most of them have not. Everything in between has mostly gotten left behind, especially on their Bitcoin pairs. They never really truly had, rallies to all-time highs. So maybe what we need is if we can get a couple of years now that we're under a new administration, we have deregulation. Maybe if we can get a couple of years where people can build without the fear of being sued by the SEC, perhaps in a couple of years we can get back to a more normal market where we're more excited about what's being built and how it's going to change the world and how do we do that rather than just focusing on when's retail coming back. And that's what I said in the video, right? I was like, this cycle feels different in one sense because in 2020 and in 2016, I don't ever remember thinking like, oh, when's retail going to come back? Like, I don't remember like watching YouTube views and Twitter, like I didn't really care. I thought the development in the space was really interesting, right? I really liked following Ethereum, back in 2019 and 2016 and 2017 and some of these other projects. I really liked watching what they were doing back then. And it just made it such an easy investment because like you could see what they were building and you knew that if they build a good product, then people would eventually come. Now, this cycle, we've been more so focused on how do we get crypto in front of more people. It's like, let's focus on the meme coins, like, influencer shilling meme coins. We're focusing on the ETFs and we're focusing on the strategic Bitcoin reserve. That's more of like getting it in front of more people. And I think we need to focus more on how do we make crypto better. And again, I don't really necessarily think it's entirely the industry's fault. I think a lot of it could just be due to fears about, regulation, right? And that's not to say that no one has built. I do think that some people have built over the last couple of years. I think some people have taken that risk. I just don't think they're getting noticed right now as much because investors are not, they're misallocating their capital, right? They're misallocating it over to meme coins instead of to the projects that probably actually deserve it. Now, if you're a Bitcoin maxi, you would just say that everything is a meme coin. But I actually do think there's something in between the meme coin market and Bitcoin, right? There's something in between there that I think can provide value, but investors haven't rewarded it for the last couple of years.
Yeah, and you know what? It's we talked actually it was last week. We were talking about views on the channel, and I was like, my views are down. I don't really understand why it is, and I think I know what it is. It's because I don't really get excited about the market like I used to, the things that we're building, things that we're growing, things that were coming up. And I just can't get excited about a meme coin and putting it in. And the last thing I'll say is about this is I know some people will call, like, for example, Solana. They'll say Solana is the biggest VC coin. Why would you ever own that piece of trash? And I will tell you like this, from the people that I talk to behind the projects, as I sometimes do, all the VCs that are doing now, they're not investing in new upstart projects. There are some, but what they're really doing is they're investing into meme coins, and they're pulling you guys in and they're dumping on you. So if you want to keep doing that, that's fine. I have no problems with gambling. I mean, I don't, but I mean, once a year is okay. But if you keep doing it repeatedly, you're a degenerate gambler. That's it. So that would lead us to our last question, which is you blew it. And I just wanted to do this as a hypothetical, because I got a lot of people in here who are not too happy because their altcoins didn't do so well, or maybe their meme coins didn't do so well, whatever else it was. So this is not financial advice, but I'm going to ask you guys, if you did blow it, at some point you got in too much of one side or one or the other, how do you right the ship? What do you do right now? What's your take? What do you change, or what do you keep the same? And Ben, since you were talking, I'll start with you, and I'll give Dan the last word.
The great thing about the market is that it always gives you another chance, right? I mean, every one of us has made multiple mistakes, right? I mean, we can all sit up here and sound smart, but every single one of us has made multiple mistakes in these market cycles, and especially me, and so I think the thing to remember is that if you have made a mistake this cycle and you've invested in things that haven't really done that well, just consider it your tuition to being onboarded to the cryptoverse, right? And don't let it discourage you from sticking around. Just be aware that this is why it makes sense to value your portfolio in, say, Satoshis, because it kind of keeps you on track. Like it helps you focus on what actually matters in the asset class. A lot of altcoins come and go. Bitcoin sticks around, and I think if you can do that, if you can sort of if you can mentally think about your portfolio in Satoshis, then I think it does help a lot. So kind of the thing I've said before, right? It's never too late to start doing the right thing, right? Like if you've just been losing your money in meme coins for the last 2 years, it's not too late to stop. Like you don't have to keep doing it.
It sounds like a PSA. It's not too late to stop. You can control yourself.
It's not like, but I feel like a lot of people they can't stop. And it's kind of like the gambler thought, like that had they stayed at the slot machine for one more hour, they would have struck it big. And I think a lot of people fall into that trap. They think if they just stick in the meme coin casino for a little bit longer, they'll find that right one. And what's really more, I think, fulfilling is that it's been a lot easier this cycle to grow your wealth slowly with Bitcoin rather than try to 10x it overnight with a meme coin and just end up losing 95%. So I would say that, and if you're sitting on a lot of altcoins and you're wondering what to do, I mean, that doesn't even necessarily mean you got to go panic sell them back to Bitcoin right now. There's always a chance dominance goes higher, for sure. But I mean, as Dan said, I mean, there's still a chance we get alt season this year. And normally, if we do get it, it is in the post-halving year, right? I mean, if it's going to happen, it would be this year. So I'd hate for people to hold their alts for 3.5 years, watch them bleed to Bitcoin, and then they finally sell the bottom, and then they go up. That would be very unfortunate. So I would say you don't need to necessarily make any rash decisions at the moment. Just as you go forward into the cryptoverse, learn from your prior mistakes. And the last thing I'll say is what I told someone last cycle when they were super heavy into altcoins, and they were like, hey, I'm 90% alts and like I'm only 10% Bitcoin. What do I do? And I was like, the best thing to do rather than make a rash decision is just slowly work on getting the portfolio percentages in a better arrangement, right? It doesn't mean you have to go panic sell everything into Bitcoin or whatever, but just slowly work on it. And over the course of a longer period of time, try to get your percentages into something that makes a little bit more sense. That's what I would say.
That's pretty good. I like that one. And Dan, what do we got?
Yeah, I mean, I think I'll start, I guess first thing I'll do is I'll zoom out a little bit just to remind everyone of something that I think is very easy to forget. of course, like arguably we've had lots of inflation, not just since the pandemic, but basically like since 2008, there's been lots of money printing and assets have gone up and everything. And you can make the case that even before that, the only two, at least as far as I can tell, the two asset classes rather that have performed the best over the last, let's say 15 years, 20 years has been finance and technology, right? Of course, I know like there was the bubble in 2001 and whatever, but if we look at like the top performing assets of the last quarter century, it's technology and finance, and crypto is fundamentally, or like technology and people who've been speculating on the technology, like financial stuff. Crypto is a combination of technology and finance. And this, I guess, underscores your point, Rob, is that we have kind of gone astray in the sense that, you know, there's a difference. This is something I'm always telling people in the Coin Bureau Club, is that there's a difference between a narrative and a meme. Like meme coins are just like, memes are temporary. It's something that not everyone understands. It's something that's funny for a little bit, but has no staying power. But a narrative is something that is that people, you know, there's a reason why so many people keep buying XRP no matter what, right? It's because it has a very powerful narrative. Same thing with Cardano for that matter. XRP, it's like it's working with the banks and all this stuff, right? That's the narrative at the surface level. Cardano, that's the thing that got me into ADA actually back in the day. It's backed by academic research, right? Which, you know, and once you get into the tech and whatever, of course, you can have like nuances and disagreements. But for the layperson, for the person who doesn't understand anything about crypto, especially because crypto has this reputation as being shady, and then you hear, oh, this one's backed by academic research, that can't be, you know, shady. It must be legit. One thing that I think we're missing, and this is to Ben's point, and if you're holding, I guess I'm going on a tangent here, but if you're holding a portfolio, like basically if you have a portfolio that you had lots of losses, if you have meme coins, I don't know what to tell you. If it's all meme coins, I don't know what to tell you. You know, like Ben was saying, you need to get help. But if there's altcoins in there, and if the narrative is powerful, and I guess to Ben's point, if it's something that as a result of regulatory changes, you know, like if it's something that could actually get adoption, because this is what people I think don't understand, is that over these years, like Ben was saying, is that there's been so much development in crypto, and all these products, like it's crazy actually. Even in my own research, I found a lot of cryptos that have been around. They raised money all the way back in 2017 during the ICO boom, and they're just now finally, after 5 or 6 years or 7 years of building, they're finally launching all these products and protocols. Yeah. And the thing is that that the changes in regulations in the US will actually make it possible for people to use it. You know, all these headlines about like Google integrating and Facebook integrating and whatever, because, you know, remember that was the hype in the 2017 was everyone was saying, oh, they partnered with McDonald's, right? Or whatever. But the thing is that this is actually going to happen now. Once these regulatory changes come into place, this will actually happen. So if you hold a crypto that you believe provides some valuable function, that actually has a strong narrative, I don't know, decentralized Netflix, right? Something that someone could understand, something that actually has a functioning product. And a lot of these cryptos actually do now. If you have something like that, I don't think you have to be concerned. Like, you know, of course, there's no guarantee that, like, you know, there's going to be LTs and all this stuff. But the way that I see it, and I'll end on this note, the reason why Bitcoin has done so well until this point, in my opinion, is because the spot Bitcoin ETFs fundamentally changed the structure of the Bitcoin market, rather, that it made it easier for money to flow from TradFi into Bitcoin through the ETFs. We are about to see the exact same thing happen with altcoins. It's going to take time, but it's going to come, and it's going to come in multiple forms, not just ETFs. There's going to be spot altcoin ETFs. There's going to be real world assets from asset managers. There's going to be integrations and partnerships with these traditional companies. So if you're holding a crypto that falls under any of these buckets, I don't think you have anything to worry about. And just to underscore Ben's point, I have 50% of my portfolio. I hold 50 altcoins, okay, around 50, but 50% of my portfolio is Bitcoin. So this is, you know, and on a distribution, it's like, right? It's like almost like Bitcoin biggest holding, and then you have Solana and Sui and whatever, and all the way down. But the thing is that I do believe, like, wholeheartedly, because the narratives and the product, it's actually there, and everything is coming together in the most, like, the backdrop cannot be better than this. You're entering an era in the US where, to Ben's point, not only is it going to be easier for builders to build, the president of the US launched a meme coin and got away with it. Like, anything will be possible. And of course, the result is, you know, we saw some speculation in meme coins, but and sorry, Rob, I'm rambling on this, but the one thing though that I want you guys to consider, very simple example, a crypto project like Helium, right? Like you have like the mobile plans. Mm-hmm. Imagine that Helium starts, like, due to change in regulation, they're able to airdrop crypto to people who are using this mobile plan. Imagine what that does, how much that will completely shake up the existing notions of how people measure like user adoption and whatever, that you have, instead of a mobile company that's competing on cost and whatever, they're actually giving money to their users. This is the type of stuff that I believe we're going to see this year. And it's going to result in a huge surge into not things that are memes, but things that are narratives and have utility and have product. And I think you should really not underestimate just how crazy it could get. And I know it's really hard to see that when you're sitting up close. And I have many altcoins that are down 80%. I have no concerns at all. I partially because I'm 50% Bitcoin, but mainly because we are going to see a structural change to the crypto market in the US that to an extent which we have never seen. And there will be a period where you will see things that you just did not believe could be possible. That is my say there. So if you believe you hold the crypto that's in there, not a meme, but something that could benefit from that, I wouldn't worry too much about that. Yeah.
Yes. Well said, both of you. So guys, I will tell you this, that was a great episode. A lot of alpha, a lot of information. I want to thank you. What we'll do is we'll do a little Q&A. Since we're going over, I'm just going to limit it to 3 questions, and these are the 3 that we got. So first of all, Dan versus Ben chess match. How does that sound?
Sounds good to me.
I haven't played chess in years, but I'll do it. Why not?
Awesome. I see a live stream coming. Second question. What will you guys take profits into? Index funds, how many percentage of Bitcoin will you keep through the bear? Which is a pretty good question, especially if we get this magical Bitcoin strategic reserve. Anyone want to take this one? What will you take your profits into? Straight up cash, sit on it like a melting ice cube and then buy in, or buy other different assets?
I think it depends on.
Go ahead, Ben.
Sorry, go ahead.
Ben, take it, Ben.
I think it just depends on where, like, how hot the market is. Like, if
Sure.
the market's hot, if the I use this like the risk metric for Bitcoin. Like if the risk metric's at like 0.95, then I'm probably not taking the profits from alts back to Bitcoin if I expect Bitcoin to go into a bear market. The lower the risk for Bitcoin, the more likely I would just take altcoin profits back to Bitcoin. If it if the long end of the yield curve is screaming higher, and Dan's theory about the stablecoin stuff holds true, that eventually the idea would be that the 10-year yield would the long end of the yield curve would then start to come down a lot, right, at some point. So if you believe that, then I guess bonds, but it's probably a little too early. I don't know. I mean, that phase could still be a little ways off. There's also other stuff too, right? I mean, there's just precious metals if you want to get in there. If you want to, if you like watching paint dry,
Good one. Now everybody, all the gold bugs hate us. All right.
No, I mean, look, I do own some gold. I mean, I actually think gold is still pretty bullish for probably the next few years, is my guess. But I don't think anyone watching the stream right now is here because they want to be a gold investor. But during the midterm years, right, your 2014, 2018, 2022, you'll often see gold outperform crypto. You'll see even stocks outperform crypto. So yeah, I mean, but I think at the end of the day, no one knows what's going to happen. All models are wrong. Some are useful. So I think it does make sense to always keep some in Bitcoin. I wouldn't say the same thing about altcoins though, because they really can just. A lot of them can just die and will die eventually, especially the meme coin market. I mean, that's just their fact. They go asymptotically to zero, and that's just the way the market's going to work. But yeah, so I would say it depends on when. But I do think that it always makes sense to have like a kind of like a hodl stack of maybe it's like 20% or something. Just in case, right? Like just in case all the models are wrong and Bitcoin does something that no one is expecting.
I can get behind that. Dan, what do you got here?
I think I agree with Ben. I mean, to some extent, I would probably just do primarily gold and then select commodity ETFs depending on the location and stuff. I think that the one very quick thing I'll add here is that we get this question a lot, even like in our Discord. It's like, what are you going to do with the profits? Like when you rotate, and the kind of the assumption behind that question is like, where can I put my money so that it continues to grow? My kind of contrarian take there is I actually think it's going to be a little bit more difficult it's not going to be possible to just stick your money blindly in a market and then just allow it to just like go up indefinite. I don't think it's going to be like that. It was like that for the last 20, 30 years. I don't think it's going to be like that for the next 20, 30 years. I do think it's going to, and it could still be like this by the end of the decade. But I'm going to be, the honest answer is I don't know, because it really depends on what things are looking like at that stage. But it'll probably be some combination of gold and commodities, because I do think that a commodity cycle will start, if not by the end of this decade, then sometime in the early next decade.
Yeah, perfect. Exactly. Nobody knows, and you have to play it by ear, because we don't know where things are going,
Rob,
and especially specific times.
And Rob, I think I'm going to rely on you to tell me when real estate is a good investment again.
Hey, there's deals everywhere, baby. There's deals everywhere.
Hey,
all right.
Hey, just like there's some altcoins that do well in a Bitcoin dominance upturn, right?
Exactly right. Exactly right. Thank you. So last question. What's Dan's X handle? That's a great question. So Dan's X handle is CRYPTOVERSE, but don't worry, because I put it in the description. Follow Coin Bureau Head of Research Dan over here, on top of all the different links to Coin Bureau Club, where you can check out Dan's crazy portfolio, which is actually pretty good. I actually agree with it. Coin Bureau Club, Coin Bureau YouTube, more Coin Bureau Trading, Coin Bureau Espanol, and of course Ben's website and X handle. And that's it, everybody. I think we went pretty long today. So are we good there? Does anyone want to say anything else before we take off here? Great. I mean, everybody.
I think we covered it.
Thank you. This was a great episode. I really appreciate you guys coming on, giving some really good information. Everybody, if you don't follow those guys, links in the description. Thanks so much, everybody, for stopping by, and we'll see you on the next one, which will be on the Guy's channel. All right.
There you go.
I did it. All right. All right, everybody. Thanks so much. See you in the next one.